Good afternoon, everyone. 6:10 here in Notting Hill, West London, on Tuesday, the 18th of January. I had a bearish disposition in the VectorVest Q&A session on Monday afternoon, and I see at the open the American market has fallen hard today. The S&P is down 87 points at this stage, and the advice on VectorVest is to sit on hands. All measures of the trend are down. That hasn't changed for quite a while. So if we have a look at the VectorVest composite, that's the VectorVest composite, folks, and it gave a confirmed down signal on the 22nd of November. And that's, 2 months ago. So this market, in fact, couldn't get its nose up for the last couple of months. So this is not really a surprise. If we get rid of the signals now and sort of zoom out a little bit, we can see that there's a very important level here that's been in place for quite a while. That's under a great deal of pressure. Resistance, resistance, support, 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 and that would seem to have given away this afternoon. A close down here is going to be quite serious. So I think that markets approaching a mega oversold situation, in that the proprietary MTI is at 0.61 and the buy-sell ratio at 0.33. Buy-sell ratio needs to get a bit lower to actually around about 0.25 to move into that mega oversold situation. But nevertheless, markets are stretched to the downside, and we can quite easily have a spring from here. Whether that's a rally in a bear market, or whether the market's going to move up again, time will tell. But we can quite easily have a run up here. Many of you I know like the bottom fishing technique. If that's for you, then there could be an opportunity ahead. I had a watch list prepared for today. Well, before we do that, let's look at the S&P. That's the S&P off today. That's Friday's little bounce. And those of you, us in the UK, our market bounced on Monday when America was closed. Based on that, most of that up move happened after our market had closed on Friday. The US market opened down, and the FTSE's opened down, traded down most of the day. The only things that are up are oil stocks, as oil broke a new, I think, 5-year high or something. So an important level on the S&P as well, and as you can see, resistance here. So the next level, I think, here that we can get down to relatively quickly is 4.5. That's only 75 points away. I had a watch list prepared, and I like the look of MU, but nothing done. I'm going to do absolutely nothing onto the trends on VectorVest turn. I particularly liked it because fundamentals are great, and as you can see, that low and this high are separated. That's what I call a fast trend. If I put on my moving averages, you can see that it's trading above the 21 period moving average, which is above the 55, is above the 89. It's a good place to be. I like the way it actually gapped out of this consolidation. That's always strong. If we get a market with a little bit of oomph in it, then the VectorVest valuation is right up here at 120. So that's something that I'm looking for, and if you are a bottom fisher, that be useful. This is ZIM, and ZIM has broken strongly. Again, the moving averages are good. It's trading above the 21 period moving average, and it's had a pretty good day, folks. It just hasn't come back at all much. Where we're at now is slightly lower than where we were yesterday. That's certainly one to watch if the market should turn. This is AMD, and I spoke about this. There is a textbook Wyckoff spring here. Maybe many people will call it a Gartley pattern as well. I was a bit upset that I didn't get into this last week, but I waited for the market to turn. It didn't turn. So I think that if the market turns and we get a break above that high, I think that high is of last Thursday or something, then I think that will have a nice swing trade long. The market needs to bottom out and turn first. Remember, we want to buy shares that are growing earnings strongly, reasonably safely, that are rising in price, that are in the throes of a strong trend, and we want to buy them when the general market is rising as well, to line up all the probabilities. So that is something that I'm looking at. This is NVIDIA, quite weak today. It's got a lot of work to do to confirm this bottom. This is Qualcomm, and this share sitting in this nice consolidation after a big gap. Again, it's sitting right up on the 21 period moving average, and the 21's above the 55, is above the 89. Momentum strong here. Will this break? Well, it's got a really cool VectorVest valuation of 240. Shares significantly undervalued, and earnings per share over the last 6 months has risen from less than $8 to 10.77. That's quite something. So fundamentals looking good there. All we need is the general market to come right. This is Toyota, and I think Toyota is pulling back, filling these gaps, and it broke here on big volume and went sideways. That would have been a great place for a breakout trade in this inside bar, and now we've got another bite at this. The VectorVest valuations up here at 259, and earnings rising nicely from 15 to 1950 over the last 6 months. That's quite something. So there's certainly a lot of room in Toyota. We just need to wait for a really good entry. And this is Ford. Moving average is looking good. A nice gap out of this little consolidation. It went sideways and falling volume. It broke up and rising volume, but we need the general market to come to the party. The share's trading well above the 21 day moving average, and on VectorVest, as you can see, slightly undervalued here, so a little bit in it. Earnings per share also rising, not quite as dramatic as Toyota. So those are the shares that I've been looking at. Nothing done, and nothing has been done because VectorVest does not advocate buying any stocks at this time. Until that changes, then I shall sit on my hands and do nothing. So I hope you found that useful. I haven't done anything in the UK further to the Q&A that I spoke about yesterday afternoon to the VectorVest customers. I will have a look at the UK market after the close. If there are shares below their stop loss, then those shares will have to be got rid of in this environment, folks. Let's just watch for a bounce here. If we have a look at my old friend the S&P once more, starting to come off these lows. If we have a look at it on an intraday chart, nothing worth here. We've had a couple of bounces today, nothing worth as yet. So nothing for me to do today certainly on the long side. So it's time to be very careful, folks. Interest rates are rising, and markets quantitative easing has been replaced by quantitative tightening, QT for QE, and it's going to take the markets a few days, a few weeks at least to absorb all of that. So let's be very careful. Certainly for yours truly, I did very well on the run up from the COVID low, and I have no intentions of giving that back again. Markets do climb a wall of worry, and maybe I'm being overly concerned, and my son tells me that I'm not happy unless I've got something to worry about. So maybe that's me worrying about nothing, but I intend to manage risk very, very carefully at this stage. My mind sees a similarity between what's happening now and what happened in October 2018, where there the Fed was going to put up rates. They didn't, but we had quite a strong pullback. If you examine the chart, October, November, December 2018, we had a very strong pullback indeed. So let's not avoid risk, but manage risk carefully. Thanks very much.